Okay, so you're now in JP Morgan. You've written the book. You're the UK bond guy. How did that come into play with this changing English market?
So I had to try and get the bond desk working. And they also wanted to change the way the entire government bond market was structured. And they'd written a paper and they had set up a meeting in the Bank of England.
Was this a
They
hazing
sent
ritual? Like what's the
Margaret Thatcher may have actually even read it and she liked it. And so she just called up the Bank of England and said, I like it, do it.
Welcome to the show, Dad, How Does Money Work? Where we ask questions such as, will the American economy ever calm down?
Very good subject, very good title. Yes, we don't necessarily have the exact answers, but it's a good question, and we have to explore that. So thanks for setting up this chat.
Of course. Um, and that was a very professional non-answer to the question. We'll get back to that later. I wanted to start by just going off a childhood memory of when you and our early relationship was about sports. And I remember being stunned when you told me about cricket, how long it took, and that you even recorded all the statistics on the game. What was going on there?
Yeah, well, I guess yeah, it's a strange animal as a sport, really, cricket. It only understood by few countries to play it. Yeah, it takes 5 days. The big test matches between the big countries takes 5 days, 6 hours a day, and usually it's a draw. That's quite hard for most people to get their minds around just there. So I won't go into any further details, but it's a great user upper of time. I was at boarding school, but I lived sort of far out in the country. So when I was at home, I had to kill a lot of time between school and because I didn't have any transport. And so I would, find a way to enjoy the sport just by really getting into it and scoring it. You can analyze it. I'm a math guy, so I like numbers, and you can see the game in a different way if you have the score right in front of you. So it's a good way to keep the score. I guess I'm still doing that different way.
Yeah. The things people did before the internet was created. It's mind-boggling.
That's right. That's right. Absolutely. It's a different world.
Yeah. So keeping the score and stats, and you said you were into math and sports, and that continued into university. Uh, did you know what you wanted to do when you went to Oxford?
Oh, absolutely. We have a very different system in England. You more or less specialize at the age of 16. So at 16, you take normally like three A levels, and I did math, further math, and physics. So I was already specializing at 16. So that was like 3 years before I went to Oxford. 2 years, 2.5 years. Um, and so, yeah, absolutely. You apply to do a subject as well. So it's actually, written and decided the day you arrive.
Hmm.
Yeah, yeah, absolutely.
Okay, so you knew what you wanted to study, but not necessarily your profession. What did you do right after college?
Well, I guess I didn't quite know exactly what I wanted to do, but I stayed on the math track. And because I didn't know what I wanted to do, I got a job that was two jobs. Um, so I could sort of go through them and see, what I wanted to do. One was computer programming, and the other one was an actuarial trainee where you have to start taking these exams for an average of 7 years of study over the evening when you're working during the day. So it's it's one hell of a slog. But so I started down that track with two jobs.
Right. And so this was one place that you went to that had two
Yeah,
parts to it, or okay.
yeah,
And what do you
yeah.
think
It
of
was.
both of those?
Yeah, it was Friends Provident Life Office, who at the time seemed to be ahead in terms of technology for insurance companies. But laughable today. We had punch cards, and we had a huge wing of a building with an IBM, and that was state of the art back then. But yeah, I really enjoyed the programming, and I did well at it, and I was given special assignments. So yeah, I very much enjoyed that, but I didn't think that it was valued particularly enough. The skill of debugging and goodness knows what. So I didn't really feel there was a future there. I was still looking, trying to understand what an actuary was and pass the exams.
I probably wouldn't have pursued computer science myself if we were still back in the punch card days. But
Right. Yeah.
you were trying to figure out what an actuary was. What did you discover?
Well, yes, I mean, there are many parts to it. There's mathematical, there's, um, human life statistics, all kinds of things, and pensions, life assurance calculations, and whatnot. After a couple of years, I thought, well, let's try something else. And I went to a pensions consultancy, and tried that out because that seemed to be the biggest gap that I didn't have at that point. That I wasn't sure that being an actuary was really what I wanted to do.
Okay, but I thought you said actuaries do work on pensions and the like. So,
Oh yeah, they do. Yeah. So I went to the pensions consultancy to find out about that part of being an actuary, um,
oh, I see.
and continue with my actuarial training. But I think I was disabused of I didn't really feel I wanted to become an actuary at that point, and I found a better direction. Out
Sure.
of another one of the topics in the actuarial exams, which was about investing.
Mhm.
And there was just finally I found a subject that I thought, this really interests me.
Okay, so that was the transition. But before that, you had an extra event, I believe, that made you really not a fan of pensions, or at least how they were done in the UK.
Right. Yeah, that was when I started getting a bit disillusioned with becoming an actuary. Yeah, my job there was to do audits of pension plans. There was a government requirement for every company that had a defined benefit pension plan to have an audit by an actuary signed. This is all okay, and the money's going into the kitty, and there should be enough for beneficiaries of pension plan, sort of way down the road. After I'd done a couple of those, I thought that this was a very arbitrary form of audit because when you compound over 20, 30, 40 years, minor differences in assumptions within a plausible range make a huge difference. So it seemed to me that you could come up with almost any, you could always come up with a good answer just by changing the assumptions by a small amount, and there was no integrity or real validity in an audit because of incentives. Both the actuary wanted to have a good result for the CEO, and the CEO wanted to receive a good result because then he would have higher profits and less liabilities going to the pension plan. So the incentives kicked in terms of which assumptions we're going to use. So instead of using 4% returns, you use 5%. And instead of using a 2% inflation, you get a 1.5%. And wow, you've suddenly got an even stronger pension plan. And who's going to say one assumption is really different from another?
Mm.
So the whole process seemed just very arbitrary. So I
Right.
thought, well, there's must be something better to do than this.
Right. So it was less like keeping score of things and more like telling a story.
That's right. Yeah, it's good. It's a good way to put it. Yeah, it became a narrative, like as they say.
Fair enough. Okay, so After you had that experience with the UK pension plan, by the way, how did that all work out for the UK pensions?
I was forecasting that ultimately there wouldn't be enough money in the kitty when the time came. And 20 years later, the whole defined benefit pension plan schemes collapsed because the vast majority of pension plans didn't have enough money. Um, and what a surprise. So, it just, it the problem wasn't the plan was a bad idea. She was quite a good idea. Um, but like I say, the audits were meaningless and actually biased to being insufficient, which I saw 20 years before. It's quite easy. Unfortunately, today people are getting similar kind of plans and but with fewer protections. So defined benefit, defined contribution plans, which is what we have now.
Hmm.
Um, they may not, people need to put quite a lot into their pensions to, really get that pension sorted out, invest it well. And really the amount of advice they get and the professionalism of the advice is, less than it was then. And even then it wasn't successful. So, you know, it's really important to get good advice on
Yes.
that subject. But it was a big learning lesson, and yeah, I think we're still struggling with that today.
Yes. I mean, who would have thought that short-term incentives don't produce the best long-term results? What a stunning
What a
turn of
surprise!
events.
What a
Yes.
surprise! Yeah, that's right.
Okay. So you were talking about how this was kind of your last hurrah being a pure actuary, and then you made a transition into toward investing. How did that go down? Where did you go after the UK pensions?
Yeah, well, it was an exciting time in London because it was 1984, and in 1986, the entire City of London investment world was going to get turned upside down. Um, it was going to go from a parochial sort of UK-based small company, brokers and market makers, separate entities, um, into one where any big financial institution in the world, from Japan, America, Europe, anywhere else, could run a complete financial company in London because the rules were changing and the authorities were going to allow it for the first time. So I arrived in London 2 years just prior to that, so to get my feet under the table and get established as an analyst, knowing that everything was going to change. So it was a very exciting time, and I was um, fully engaged with the whole process. And it was a good, very really good move. I liked investing, and it was a great time to go to London.
Great. So London was primed for you to get into investing when the whole industry was changing. What what were you first doing? What was your first job? Where did you work?
Yeah, I worked at a brokerage company as the analyst. They put out a lot of research, and I was working with an actuary. They took over the writing of all the research for the company, and so that became my job. And I had a couple of people working for me, so we could keep up with the output. And yeah, I really enjoyed it, and it was a great place to start learning about investing.
Right. And what was your particular area of analysis and research? What did you
Well,
research?
because I was an actuary or actuarial trainee, the big thing is the bond market in particular, all investments really, but the bond market is very mathematical, and it's it matches liabilities, and which is what insurance companies have to do. So if that was a natural starting point, But once you start getting involved in investing, um, everything is connected to everything else. So it did start, extending beyond there to equities, commodities, international. So yeah, it spread from there. But yeah, initially it started in the bond market.
Where did your bond research take you? What
Uh,
that end up resulting in?
yeah, well, it's because of the changes in '86. There was a lot of change in the companies. The company I was working for was taken over by Chase Manhattan, and then I worked there as I continued to lead the research desk, and then I was headhunted by another company, Credit Suisse First Boston, who were the number one firm in the world in terms of new issuance of dollar bonds. And I was signed to the UK bond desk. So that was when I actually, by accident, became a trader as well as an analyst. And I had to write a book because they wanted everyone to write a book. Um, but the traders didn't understand all the math of the securities they were trading, how to hedge them. Some of the bonds had embedded options that required models and someone who understood the model to make the price. So I was making prices in 100 million or so while I was writing a book on the trading desk at Credit
Okay,
Suisse
that's a
First
lot
Boston.
going on.
So I was quite busy, yeah.
Yeah. All right. We just came back. We had our tea break. I unfortunately have already run out of Earl Grey tea, and so I am all the way back down to peach tea. Do you have the
Oh my
classic Earl
gosh.
Grey with you
I
today?
do have my classic Earl Grey, yeah, so I'm okay. I store
Okay.
up boxes so I don't find myself, without it.
You were
Yeah.
wiser than I. Um, so when we left off, you were talking about the book that you created, that you wrote, on UK bonds. Do you have that with you?
Yeah, the first one I read was a Credit Suisse First Boston, which I wrote on the trading desk, which is not the way I'd recommend you write a book. Yeah, it was all the analysts were told to, write a book about what their specialization was, and so that's what I had to do. And yeah, it was took me about 18 months on the trading desk. So yeah, that was quite something.
Wow, writing a book and doing trading desks. This seems to be a norm for you, overloading yourself a little bit.
Yeah, I think so. Yeah, I still haven't learned. And 42 years later, as an investment professional, yeah, I guess I just get into it. I have a passion for it, so that's fine. It's not a job to me.
So, after you wrote this book, what were the implications? What happened after that?
Oh yeah, well, um, yeah. I mean, Credit Suisse First Boston had a great profile, and with the book coming out, it was like a business card going around London, and there were so many. There were 27 market makers now in the UK government bond market. There had been five, so there was really a scramble to get the right team, to get a team that works, understand the market, the UK market. And I got headhunted by JP Morgan, and I got 13 interviews and got the job for being head of sales and trading in the UK bond desk at JP Morgan. So that was great.
So, the book served as a good intro into a bigger institution.
Yes, I guess when I wrote the book, I wasn't thinking of that, but it turned out that way. Yes, and yeah, I was ready for a change. I think after a couple of years at Credit Suisse First Boston.
Right. Okay. So, you're now in JP Morgan. You've written the book. You're the UK bond guy.
Yeah.
Uh, how did that come into play with this changing English market?
Well, I think. JP Morgan weren't doing particularly well so far in managing their UK desk. And they had a special assignment for me when I arrived. So I had to try and, you know, get the bond desk working. And they also wanted to change the way the entire government bond market was structured. And they'd written a paper and they'd set up me to have a meeting with the head of the UK government bond desk in the Bank of England. So not a small assignment. So I said, well, I guess they had no one else to go, and I guess I had a book so I presumably knew something about it. So
Was this a
they
hazing
sent.
ritual? Like what's the
Well, I think it was very unusual, but I think they realized they needed to change the game a bit because they weren't doing well. And one of the things they thought they needed better personnel, but they also needed to change the market in a way that was better for their international investors because it had been very parochial and it had many features which were different from other bond markets around the world that international investors didn't understand. And so, yeah, I mean, I think I fully backed the paper. It made common sense. But I had to break that to the Bank of England, which was an interesting meeting.
Yeah, how did that go? I'm curious.
Like it was a very strange story. So I went off to the Bank of England and I went up to the usher to say, well, I'm here and I think they've got an interview. And I was a bit struck by the usher because he was 6'6" tall to start with, and then he had a top hat, so it looked like he was 7'6". And then he had a pink coat with tails, and I hadn't seen this before, so I was wondering what was going on here. And so anyway, he said, "Well, come this way," and he took me into the cloisters. There was no one there. It was kind of spooky walking through the cloisters. And then they put me in a room with no windows for about 45 minutes. So I think I was being given some kind of a treatment. And then they came in and they said, "Oh, he's ready. He can see you now." So I went into his office, which was uh, very impressive, you might say. I mean, a massive desk in his office, and he had a chair which was, almost like a throne. It had a back which went up about 8 feet and uh, yeah, huge arms to the chair. And just in front of this desk, there was a very small chair, about a foot off the floor, and there were no other chairs. So I guess that was my chair. So I found my way into the chair, and then we started a very brief conversation, which came down to him more or less saying, "Well, thank you for your research piece. Um, it's good to receive, the opinions from our primary dealers." And then he very briefly went to the point, which was, "We've been managing the UK government bond market for about 400 years, and we think we've got the hang of it. Would you like a biscuit?" And so I realized that I think that was it. That was the length and breadth of the conversations. It was very brief. So I reported back to JP Morgan, and they thought, "Oh, well, we'll have to try something else." And something else was to give the paper to Margaret Thatcher. And I'm pretty sure Margaret Thatcher may have actually even read it, and she liked it. And so she just called up the Bank of England and said, "I like it, do it." And that was it. So they put it in place. And so JP Morgan got what they wanted. Um, but that left me in a strange situation with the Bank of England because I deal with them all the time, and
Mm.
I don't think I was particularly popular with them after that meeting. But I was just the messenger, really.
Yes. I mean, this sounds like the pilot episode of a TV series, so it's it's quite the event.
Yeah, it was
Went to
amazing.
the Bank of England, were told no, we're fine, and then had Margaret Thatcher overrule them. So,
Yeah, it's not bad to have the your back covered by the Prime Minister. It's
yeah.
handy.
And this was how long into your job that all of this had transpired?
It was all, more or less the first couple of months that I was sent there to do this. They wanted to get things changed pretty quick.
Wow. So where do you
Um,
even go from there? What do you even do after that?
well, I had a lot to do. I had a whole desk to run, people to manage, traders, salespeople, clients to meet, um, and a trading desk. I mean, yeah, so it was, yeah, I was busy. And of course, it took a long time for them to implement the changes. So there wasn't much change to begin with. It happened over time, though.
Right. So you were in charge of, yet again, you were doing multiple roles, right? You said you
Yeah.
were head of sales, marketing, and trading, right?
Yes. Yeah.
So was this a sustainable thing that you did for your whole time in JP Morgan, or did that end at some point?
Well, yeah, I mean, there was a reason why there was a problem with most market makers. I mean, you'd literally gone from five market makers to 27, and some very big global companies trying to find a way to make this business work, not really understanding how competitive it was, how little margin there was. And so it came down to them thinking that because we had a market making desk, that we made money from market making, the gap between the bid offer spread. Every time we did a trade, theoretically, you make money on that trade. But in fact, it wasn't like that at all. You could lose money on market making. It was so competitive all of a sudden with 27 market makers that, trying to get a bid off the spread of
Hmm.
any sort, um, you know, the institutions are obliged to get best execution, so they're going to check in five places, and everyone's competing for business because you've got more market makers than five times as many market makers. There was no way you were making money out of that. What happened was that because I was reasonably successful trading, they offered me an additional role, which is to trade the bank's book in sterling. So I had another job to do as well, which was invest be a proprietary trader basically in the UK market. Then when I looked at the two jobs, one job I had a cost of $5 million I had to cover just to get to zero. And the other job, I started off with a P&L of zero. And then if I started making money, had daylight.
Hmm.
And given the complications and difficulty of doing multiple jobs and then getting sometimes my management was interfered, I was away and they replaced one of my employees and I didn't take lightly to that. They didn't really understand what they were doing and didn't discuss it with me. And I thought, well, if they won't even let me run it properly, then I think I'll take the other job and start with a zero P&L at the beginning of the year. That's better than minus 5 million. So
Yeah, that seems like a much better start. Minus 5 million is a rough starting line, in most
it
things.
is. It is, yeah. I'm trying to explain that and I don't think they understood it. But anyway,
Yeah.
that got me to move in, and I could just really focus on trading, which I love doing. That
And
was
so
fun.
how did the trading go? How did you do for JP Morgan?
Really well. I mean, over the years, yeah, I think probably in the first 3 or 4 years, I think I made over. Yeah, I do. Don't think I did. I made over 200 million on my book. So it was very successful, and I really loved it. So it went very well. And I got more and more flexibility to trade anything anywhere. Um, so I was allowed to trade, equities, commodities, bonds. So I really stretched what I was allowed to do. And so it was fantastic sort of uh, experience, really.
Right. So this was when you really started doing broad scale investing instead of just being the UK bonds guy. Now, if I remember correctly, because this is very pertinent to me, I believe a good luck charm really came around around a particular year where you started performing extremely well. I'm not saying that that was the reason necessarily,
Yeah.
but
Yeah, there was quite a year I had one year. It was 1992, which is a year that may be familiar to you because it was your
hmm
birth year.
hmm
So that was quite a year in many respects. Uh, and yeah, I had my best year there. The UK fell out of the European monetary system, and it was, I think, very predictable. It was, and basically, I was in the same trade, but I was using bonds rather than currencies as Druckenmiller and George Soros. We were extremely aligned on what was about to happen, which was that the UK was going into recession and had to stick to a fixed exchange rate with the Deutschmark and other European currencies. And they they had to raise interest rates in order to keep the currency in that box. But the more they raised interest rates, the deeper they went into recession. So
hmm
it's just something had to break. So interest rates went up, which I had to manage, but I knew they were going to come down massively because the economy couldn't survive at 15% interest rates, which is where they got to. So I got the bond side, and George Soros and Stan Druckenmiller made $1 billion by on Wednesday, September the 16th, I think it was, 1992.
hmm
They literally went to the foreign exchange market and said, my size is your size. And the Bank of England ran out of their reserves, and that was it. And then overnight, they made $1 billion. One of the most impressive trades in history.
Mm. Wow.
And when they fell out of the exchange rate, interest rates collapsed. So bond markets, UK bond market went through the roof from 15% interest rates. I think that
hmm
went all the way down to five. So I caught that move, and so I made over 100 million that year. So yeah,
Wow.
that was a good year.
It was a very
Um,
good year.
yeah,
Just out of curiosity, what was your relationship with the Bank of England at this time?
well, by then I was a proprietary trader, so I no, I didn't have much contact. Not that, even when I was um, primary dealer, that we had a close relationship after the after the
After
incident.
that encounter. Yeah.
Um, so yeah, it that I didn't have much of a relationship at that time. I was a proprietary trader.
So you just had a really good few years at JP Morgan, and yet we ended up in America when I was 5.5. So
Right.
how did that whole transition happen? What went bad?
Well, two things collided in 1997, which is the year we moved. One thing is that I had an interview with the world's biggest hedge fund. So I was headhunted to have this conversation. Well, I spent a whole day. They came to JP Morgan. I spent a whole day with the head of the European, and they invited me back. I didn't really realize I was being headhunted, but when I got there, they said, "Oh, would you like to meet John Merriweather, who was the head of the world's biggest hedge fund?" And at that stage, he was considered like master of the universe because they'd made 100% in um, I think 3 years or 4 years, and they had like five Nobel Prize winning scientists, and it seemed everyone believed that they figured it all out, how
Hmm.
you get 100%. A fascinating conversation, but we fell out when we started talking about risk. It was something I didn't know exactly what their positions were, but um, we didn't see eye to eye quite. So I guess I blew the interview, but within a year, I was glad that I did blow the interview because they went bankrupt in a couple of months. The Bank of England had to take over the hedge fund. Most of the people on Wall Street were invested in the hedge fund. They lost money too, so it was a complete debacle.
Hmm.
So they basically had 4 billion of capital and they had 125 billion in positions. So a 3% adverse move in the value of their fund made them insolvent. And yeah, then they couldn't get out so they had to be rescued by the Federal Reserve.
I'm noticing a pattern here of uh you were in the pensions, UK pensions. You saw this isn't going to work out. You left. Uh, then the pensions go down.
Right,
Then you got into trading right at a time when everything was shifting, and what the years that you did particularly well was when the UK was crashing,
right.
and so you were aware of that. And then when you were interviewing for something at the very top of their performance, you were like, this doesn't look good. And then it all crashed. I'm
Right.
sensing a bit of a pattern to your career here.
Well, yes, that's right. So, yeah, I loved my time in Wall Street and I learned so much and it was a fantastic experience. But, I just never, the longer I stayed there, the more I saw the flaws and the problems and I liked it less and less, basically.
Hmm.
And so I was, I had a good run and I had some capital and I was thinking, well, I should do something else. But I didn't quite know what it was until I came home and had dinner with your mother.
Hmm.
And she had decided that she wanted to go back to America. And so I thought, well, that may be the change that I'm looking for, and so let's go do that. That's how that happened, basically.
Right. Yeah. So you went independent at that time. And what was the biggest shift in going independent?
Well, the freedom to trade your own money and do everything on your own time, is enormous, and my ability to just get into the research of everything and try, systems and models and everything. And I spent a week with a math PhD in San Francisco who was a trader too, and just learn from other people. So yeah, it was just great exploration and freedom, and getting used to being in a different country. So
Yeah.
it was great. It was a wonderful change.
If memory serves, one of the big things was that you didn't have to wear your suits anymore as well. I
Yeah, yeah,
remember I was very young walking into your office, looking at you sitting in your office chair in your pajamas with like five
yeah.
screens up. And I think I asked the question, Dad, is your job hard?
Yeah, yeah. When you're working in your home office in your pajamas, it seems like everything is easy, but trading is trading. You
Yeah.
still get a P&L. So there's no escape from getting the feedback from the market. So that's yeah, it's that part isn't easier. Um, but yeah, yeah, that was great. Yeah, and it was always good to see you. Sometimes we could play Walt Disney game on the computer, so
Oh yeah, I
that
do
was
remember that.
a good break.
That and ping pong breaks.
Ping pong breaks. Yeah, that's right. They were great.
They were essential. Okay, so you've gone independent, and several years pass, and so you're away from these big industries that are all completely telling the message of, yeah, let's take all the risk. This is the way. And you're like, no, that's not it.
Everything revolved around the bonus at the end of the year. I mean, that was the overriding. incentive for everybody. So people's time horizons were that was it. I'm getting a good salary while I'm here, but I really want a good bonus. Um, and it gives you a very short-term perspective. I mean, hedge funds, their bonuses are for the over the year, and so the way you think, the way you operate, the way you're incentivized is very different, and in many ways not always helpful
Mm.
for the most productive outcome. So it was good to get out of that environment and actually think more deeply and act freely in a way which I think is much better. Um, everybody thinks that just because you're a big firm means that you must be doing it right. Well,
Mm.
I would say that's not the case, and the big firms do have an enormous privilege. Um, it's simply not the same. So I think I always felt that I think I've written it on my website that I always felt that you could provide a better service outside rather than inside.
Right. And so what was your experience getting into client work? Because for a while you were just trading on your own capital, right?
Yes, yeah, I traded for my own capital, but uh, in the 90s, they everyone really enjoyed investing and the markets were going up. But by the time we got to 2002, nobody wanted to do it anymore because we just had a really nasty bear market. So that was a good time for me people wanted me to invest their money. So I started a business in 2003 where I could do that. It was good. By that time, I was looking for, something extra to do. And yeah, that's what I did. So I started my business right then.
Right. Okay. And so I was trying to lead you into this beforehand, but I think it was a little premature. I had asked your if everyday people had the same or different opinions about risk than Wall Street. How's your experience with clients and their tolerance for risk?
Yeah, it's always been interesting, frankly. And it's a very big subject. Uh, my own experience, always been risk averse. So people have never challenged me for taking, too much risk with their money. So that's never been the issue. Um, but I think I struggled with as soon as you become an investment advisor, you're dealing with compliance. So the whole understanding of risk and how it works with return and what is best investing immediately became an issue because what you were required to do didn't seem right
Hmm.
to me right from the very beginning. But I knew how to trade and make money safely, and so that's what I did. Um, but it became a bigger and bigger issue over time because I thought this thing just needs to be resolved in a much better way, which is much more productive for the client and clearer and more objective because most clients don't necessarily want to get into the deep details of it. Understandably, I mean, they want the job done for them, but people adopt what they hear, and the norms are set by Wall Street and compliance, and there's a tendency to oversimplify um,
Right.
and miss what's important. So yeah, you have to get through all of those things. So it's a big subject, and yeah. So I'll just stop there.
That's fair enough. No, I mean it is a very big subject. I mean it's so
Yeah.
big you ended up writing a book about it.
Yeah, eventually I grew so passionate about it and just said, well, let's just sort this out once and for all. And
Hmm.
so that's I just felt compelled to write the book, and it's very very proud of the book because I think it does say it.
Yeah,
Um,
can you show it? Book number
okay.
two?
Yeah, book number two. Yeah, sure. Yeah, invest like the best. Um, yeah, the low risk road to high return. So the word risk is right there on the front page.
Right.
So yeah, it's I to me it makes the whole thing objective, and
Hmm.
you have a clear investment objective right at the beginning, which is stated, so you can actually measure it after the event, and it's so precise that at any stage you can know exactly where you stand
Right.
because you know which numbers to look at and how you're doing. And the result is, if you do it, you get a higher long-term return with lower risk. And normally, when I explain it like that, people say, sure, that's great. But when you do it, there's all kinds of, you know, behaviors that kick in. And
Yeah.
they're actually very natural. In many ways, to be a best investor, you have to learn how to be unnatural to some extent, because you have a formula and you have to stick to the formula. Anyway, this is a big subject,
Yeah.
but yeah, I had to write the book, and
You
I'm
got to
very
stick
glad.
with the plan, and you managed to do a full circle of keeping the score on investing, just like you did with cricket back in the day.
That's right, right from the word go. Yeah, I like to keep the score and to be able to say, well, look, that's what happened, and yeah. And so, having written the book, I had a clear road of exactly what I was doing and how to report. And, I'm, very glad to say that, I feel I deliver what I preach.
Well, thank you so much for telling us about your story thus far. I think the next few conversations will be unpacking that book specifically, Invest Like the Best. But what a career thus far. And honestly, this is only part one. So I'm looking forward to delivering the full story in the episodes to come.
Yeah, well, thank you so much. It's great to have it on video. I really appreciate this conversation. So thank you.
Of course, as always, cheers.
Yeah. Cheers.